find it. Okay, 12 we sold last time, right? 14 I will solve today, but not first one. This 26 we sold last time, right?
Yes.
26 we sold. So 18, there was 18. Question 18 was good. Let's start with that. And then continue. Tenders. Okay, this 18. All right, let's start with this one. Pocket Corporation acquired 100% of Strap Corporation common stock on December 31st, 2012. Okay, balance sheet of these two companies are given immediately following the acquisition. So Pocket Company acquired Strap Company. Okay, so investment in Strap Corporation here 198. So this is immediately following the acquisition. Okay. So, at the date of business combination, a book value of Strap's net assets and liabilities approximately fair value except the inventory. So, fair value of inventory is 85. What is the book value of inventory? It is 70, right? So, how much is the excess value for inventory? 15. Land's book value 25. Fair value of land is 45. So there is an excess for land for how much? 20. Okay, good. So 20,000 for land and 15,000 for inventory. We have excess value. So how much is the goodwill? Can you tell me how much is the goodwill? Anybody can calculate it. Sorry? Zoom. Okay. All right.
First, we calculate the book value,
Yes.
common stock.
Book value. Okay, let me remove my view as well due to better to see the full screen. Okay. Is that clear? I mean, Mariam Duha, can you see and can you hear me right now? Is it everything okay, right? Can you follow me? Yes, good. So let me go on to the question. So here, Pocket Corporation, Strap Corporation, okay? Strap Corporation, common stock, and retained earnings. Yes, Dua. How much is the book value then?
Book value, common stock, we have
These two together, right? These two. So how much is it? 140. Okay. Book value is 140. How much is the acquisition price? Actually, when I look at the question, it's not set here. Okay, Dima. How much is the acquisition price then? 98, exactly, 198. How do you know that? Because this is immediately following the acquisition. So anything here investment means the acquisition price. Fajr, let's say it was, okay, acquisition was this date, but this statement was 2013. So does this means acquisition price? No. Why? Increase, right? Because it will increase by net income, decrease by dividend during the 1 year. So this amount, sorry, acquisition price, because it is immediately following the acquisition. So that time when the acquisition happened, this is the acquisition price, 198. So if 198 is the acquisition price, 140 is the book value. So the difference will be called as differential, right? Differential. So if that is differential, and we look at the excess value, how much is the excess value?
58,000.
Okay, that is differential, we said, right?
Yes.
Yeah. It was 35. So what was that? Land and inventories excesses, right? So the remaining will be goodwill. We deduct the excess value from total differential and we get it. All right? So when I calculate the, okay. First of all, differential. How much is the differential? Now, what is this 198? Everybody got it? Did you understand what is 198? That's the acquisition price, right? So what is this total? Book value. What is this 50? What is this 90? Common stock and retained earnings of whom? Subsidiary. Okay? So the acquisition price 198 minus book value of the subsidiary. So we have $58,000 of differential. This is total differential. Okay? So what about the excess value? Again, I'm repeating, excess value of inventory, okay? Normally it is 70 is the book value, right? How do I get the excess value? What I need to calculate this excess value, I need fair value, right? Fair value, and I compare it with the book value. So when I look at the fair value, it is given in the paragraph below. Okay, where is it? It is here. Look, inventories, fair value is 85. Can you see it? Okay, so this 85 is the fair value. What is the 70? Book value. So if the fair value is more, okay, there is an excess. How much? 15,000. How do we get this 15? 85 minus 70. 85 is the fair value of inventory. 70 is the book value of the inventory. So 15 is the difference. So excess value of inventory is 15. When I look at the land, fair value of land, 45. Okay? So what is the book value of the land? 25. So 45 minus 25, it is 20. What is this 20? Excess value of land. Okay, excess value for land. When we look at the land, land's fair value is $20,000 more than book. So after all, inventory's excess value 15. Land's excess value 20. So total excess value is 35. So how much was the total differential? It was 58, right? So you know this, what is excess value, what is goodwill, what is differential. You have to find the difference. You should understand the difference of these three, okay? What is excess value? Excess value is the difference between fair value and book value of each asset and liabilities. What is differential? Differential is the difference between acquisition price and the book value, right? And goodwill is any amount we pay more than the fair value of identifiable assets. So that is the difference between acquisition price and the fair value of net identifiable assets. Okay? When this goodwill occurs, when there is an acquisition in the acquisition process. Okay? So here, when I look at the goodwill, 23. What is this 58? What is this 35? 58 is the total differential. 35 is total excess value. So actually, when we talk about differential has two breakdown, right? One, goodwill, the other excess value. Together makes it differential. So if the total differential 58, if 35 is the excess value, the remaining part will be goodwill. So, and this is 23. Clear? Any questions so far? Good. So, actually, this is how we calculate the this amount. But the question is, for each of the questions, indicate the appropriate total amount that should be appear in the consolidated balance sheet. Okay, and that balance sheet is prepared immediately after the acquisition. So if I do a consolidated balance sheet, if I prepare a consolidated balance sheet, what would be the balance for cash? I mean, in the consolidation, parents amount and subsidiaries amount are calculated, the total amount will be given, right? So how much? 49 plus 30, it will be 79,000, correct? So what is the consolidated? 30,000. Okay, cash of the pocket company, cash of the strap company, together makes the total cash of the consolidated balance sheet. So that is the together. I mean, this is a group, right? Parent and subsidiary. Together, it will make a consolidated statement. Okay, we look the bank account of pocket, we see 49,000. We look at the bank account of strap, it is 30. So what is the total cash they have? 79. Clear? Good. Account receivable, 110 plus 45, it will be 155. Right. Inventory, how much will be the inventory? There is something, no, there is something here for the inventory and land. In the consolidation, how do we calculate the total? Book value of the parent and fair value of the subsidiary. Because in the consolidation worksheet, remember we are adding the difference. What difference? This excess. So normally when we calculate the inventory, either we do like this, 130 plus 85, not 70. Okay? In the consolidated balance, we take the book value of the parent, but fair value of the subsidiary. So how much is the fair value of the subsidiary? 85. Okay? Or 130 plus 70 plus 15. We can add the excess value, okay, if we take the book value of the subsidiary, okay? But 70 and 15, together 85, should be added to the 130. So what is the total amount of inventory in the consolidated balance sheet in that case? Sheikha, can you follow? Can you? Okay. What is consolidation? We are making two statements under one statement, right? The consolidated amount is the total of these two statements. But when we make this total amount, we just looking at the balance sheet, but if there is some excess value, we have to add it. Okay? So for cash and account receivable, I didn't add anything. Why? Because fair value and book value same. So I take this 49 and 30. But when I look at the inventory is subsidiaries inventory, book value and fair value are different, right? So which one I will take? Fair value, okay? If you understand this inventory, now you can tell me about the land. How much will be the consolidated balance, the total of the total land in the consolidated balance sheet? Can you say that? Rukia, what do you think about that? Book value of parent, how much, Rukia? Land. Parent book value is 80. You see that? Yeah. 80,000. So what is the subsidiaries, strat companies' fair value of land? But that is book value, be careful. Not in the table. You should look at the paragraph below. Land, fair value of land for subsidiary is 45, exactly. So in this case, 80 book value of parent, 45 fair value of subsidiary, together 125. Is that clear? Good. So if we want to prepare the consolidated statement, okay, what we will do? Consolidated amounts. Here the first one, okay, but okay, first one 79,000, right? The second one 155,000, correct? But the third one, we have to be careful, 215,000, okay? Because we have excess. We use 85 instead of this. Okay, what is the fair values? Fair value of inventory is 785, the other is 45, right? Okay, so we are taking this too. So when we are calculating the total amount, be careful. Now the third one, not 70, but 85. Not book value, but the fair value we are using. So when we look at the land, how much is the total amount of land? 125 now, okay? And what about the building and equipment? 900. Actually, when we do the consolidation, we can eliminate this 165. So 900 minus 165, we can calculate like this. Because we are eliminating it, you know? So the total amount will be there. So what about this accumulate depreciation? How much will be the balance? Actually, not make my you understand maybe as minus. So this one accumulate depreciation, how much will it be in the consolidated balance? Tell me how much will it be? $223. Okay, accumulate depreciation is eliminated, right? Do you remember? So since accumulate depreciation eliminated, 165 will be decreased from building and accumulate depreciation together. Because of that, I said minus. Okay? And then investment. How much will be the investment? 0. Okay, very good. Very good answer. Investment in subsidiary in the consolidated one will be 0. Is there anything else? We will have another account. What is that? What is that? We will have goodwill. Okay, we will add goodwill. Remember? And goodwill will be 23,000. Okay, so the total asset will be like this. Goodwill will be added, so total asset will be like this. Okay, I give in general how it's seen. But in the question, actually, how it is asked like this. They ask, how much is the balance for inventory in the consolidated balance sheet? So, what was your answer? Remember, let's do it again here. The answer, okay, for this one, for the inventory, Sheikh, how much was it in the inventory? Do you remember? 130 plus 85, right? Okay, you need to wake up. So you see this 130. You see 130, and this 70, but we don't use 70. We use 85. Remember? So here, when we are calculating 130 plus 85, it was 215. Is it clear? Clear? Good. So Now here, in this one, when I answer the question, 130,000 plus 85,000 and equals to 215. Now what is the answer of 1? D. D. Everybody agree on that? Okay, you can follow it, right? Thank you very much. So, what about the goodwill? How much is the goodwill? 23, exactly, great. How we calculate it, you remember? Total acquisition price minus book value, we get differential, and we deduct the excess value, and then we get the goodwill. Already we calculated that. So what about the total amount of assets reported? Now, this question takes a bit time. Okay, look at here. I said that cash 79, account receivable 155, inventory, land, building, accumulate depreciation, and goodwill. Typical mistake is forgetting goodwill. Don't forget it. And then how we do it, let me show you. Okay, here is the total asset. Now look at the total asset. Cash, 79. Is that clear? 79. Account receivable, 155. Pay, is that clear? 155. Okay. What about this 215? Why we take 85? Fatma, why we take 85? It is 70 here. Why we didn't simply multiply this, this one total? Why we take 85 instead of 70, Fatma? Because of fair value, right? This 85 is the fair value. Yes, please.
It's not showing
Which one?
the right.
Okay, I wrote them. Now I am explaining you. This is the solution. So this part I did it for you. I prepared it and now I'm now showing it. In the previous one, I just simply write on the right side, but now I show how I did it. Okay? So you can take notes or take picture, whatever you want. But the issue here, okay, building and equipment, for example, building and equipment. Dua, did you get the point why we deduct 165? Eliminate the accumulate. If we don't eliminate accumulate depreciation, so accumulated depreciation amount will include this 165 and that we don't deduct. But if we do, we should do together at the same time, okay? Now here, we are deducting here 165. Also look, accumulate depreciation, we deduct 165 as well. We only take 223. Why? Because we are eliminating this accumulated depreciation. We are not taking the subsidiary. Okay, if you don't take subsidiaries accumulated depreciation, but if you don't deduct from building, that will be mistake. You understand? Either you do together or you don't do neither of them. Total asset will not change. Okay? If you forget doing the deducting the accumulated depreciation from two of them, total amount will be the same. But if you deduct from building, if you don't deduct from accumulated depreciation, that will not be a correct answer. Okay, you got the point? Yes, please. 900,000.
Yes.
Which one?
900,000 minus 165.
Okay, 400 plus 500. How much make it?
900. Okay.
How much does it make?
Okay, 500 and 400 for what?
Okay, for what?
Yes.
What do you think?
I don't know.
Anybody knows? Can answer this question? Anybody? The question is this: where did I find 900 in the previous part? Where did I get this 500 and 400? That is the question.
From building and equipment.
In the balance sheet, right? In the balance sheet, 500 is the amount for parent. Okay, Fatma? And 400 is amount for subsidiary. But then later, we are deducting 165. So why is this, Fatma? Accumulated depreciation is eliminated. As I said, if you do this, you should deduct from accumulated depreciation as well. But if you forget doing it, okay, don't do other one as well, you know. I mean, if you keep the same, okay, total amount will not change. Is that clear so far? So when you calculate the total asset, please don't forget include goodwill, because goodwill is also an asset. Okay. So the total of all makes 1,109,000. Okay. How did we get this 1,109,000? Gufran, how did we get it? 1,109,000. How did you calculate this?
The total assets.
The total of this all, right? Look, this cash, account receivable, inventory, land, building, accumulate, everything, we get the total of them and here. Okay? Clear?
Doctor, we can
The total asset here in the consolidated balance is the total of cash, account receivable, inventory, land, building, goodwill, minus accumulate depreciation. So if you calculate the sum of this all, you will get this number. Actually, building is this, not that. Okay? Sum of that is the total assets. Clear? Good. So why this investment is zero? What do you think about that? Fajr, why this investment is zero? It was here 198. Why didn't we take this 198? Yeah, we eliminated it already. So in the consolidated balance, there is no investment. Clear? Good. So if you understand them all, so you understand that the answer of this, which one was it? B, right? No, not B. What was it? C. 1,100,000 and okay, 9. Good. So answer is C. So how much is the total amount of liabilities? How much is the total liabilities? How much is the total liabilities? Total liabilities, okay, let me come here. 61,528, 95 plus 37, okay, 280 plus 200. So when we calculate the total liabilities, okay, we have the total of this, all right? Is there any fair value difference for the liabilities? No, because there is nothing mentioned here. It means that all book value of the liability same as the fair value. So we just take them. So 61,500 times plus 28, you get that 89,500, right? Okay, and then what about the tax payable? It is 132,000, correct? And what about the bonds payable? 480,000. So these three are the liabilities, correct? Any other liability? No. So just simply the total of this all, you get the, okay, total amounts of liabilities. Okay, that will be here. Okay, how much?
701.
Good. So total amount will be 701,500. So the answer is C. Can you follow it? Any questions so far? Clear, right? Good. So next question. How much is the consolidated amount for retained earnings? Okay, who wants to say that? How much is the consolidated amount for retained earnings? In your opinion?
257.
Yes.
What is
This is the parent's retained earnings, right?
what is the
The question is this, in the consolidated balance sheet, what is the amount of retained earnings? Look at the retained earnings. What do you see there? 257,500 is the parents. Do we need to calculate the total amount of this? Do we add 90? No. Why is that, Fajr? Because we are eliminating subsidiary. So this 90 is eliminated. So we don't have it in the consolidated amount. we have only parents number, right? Old consolidation, we did do it. So 257,500 is the retained earnings. What about common stock? How much will be the common stock? Same as the parent. How much? 150, correct? So how much is the total stockholders' equity? 150 plus 257,500. So when I talk about how much is the total stockholders' equity, it is 150,000, right? Common stock plus 257,500. The total is 407,500. Correct? Okay, here we have only two items, common stock and retained earnings, correct? We have only them. So for this, all right. So we will have quiz week 11. Probably I am planning to ask like this. I will give the tables and I will ask you chapter 4 or 5. It doesn't matter, they are similar, okay? 5 is we are adding non-controlling interest. Only we add something else there. All right, so the answer here, what is provided by the, your book, this is how they solve it. But I think you understand my way as well. So it's clear now, right?
Doctor,
Yes.
we always eliminate the subsidiary in retained earnings.
Of course,
Stock,
of course.
consolidated.
Of course. Common stock and retained earnings should be, even additional paid-in capital is same. Anything in the consolidated, anything in the stockholders' equity, same as parents, okay, in the consolidated balance sheet. All right, now this is the question that we solved now, 18. Yes, please. Of course, anybody wants to leave, just let me, you want to leave, just, you can. All right, now, 533 we have, we can solve it, 533. So, 533 is about consolidation, okay. Here's the question here, it's behind, so let me show from this one. Okay, let's remove this. Add this. Okay, now I am opening it. No, what's happening? I made a mistake. I should share PowerPoint. Okay. Now, question 33. And back. Okay, the question is this. Let me make it more clear to put it here. Yeah, this is the question. Can you clearly see it? Dima, can you see it? No? Okay. The first part, can you read the first part? Price? First paragraph? Maybe it's better you to sit front then. Yeah, that's better, I think, to see. Faye, can you see it? Or do you want to sit front? Okay, it's okay, right? You can see it. Can you? Yes? No? Yes? I can't hear you. Yes, it's good. So, Price Corporation acquired 100% ownership of Sabre Company, okay? How much? 128. Okay, when? January 1, 2008. So this is the first year, okay? Or 18. At that date, the fair value of Saver's building and equipment was 20,000 more than book. Okay, 20,000 more than book means this is excess value, okay? If it says fair value is, let's say, 70,000, okay, that's the fair value. But now here, it says that more than book, 20,000 is the excess value itself. Building and equipment are depreciated by 10-year basis, okay? Although goodwill is not amortized, Price's management concluded that goodwill will involve its acquisitions, okay, and impaired, and the correct value now $28. So what about the book value? Okay, what about the book value? So book value of the subsidiary, common stock 60, retained earnings 40. So together 100, okay? So if it is 100 and if this acquisition price is 128, how much is the differential? 28. How much of it is excess value? 20. Only one excess value with building. So the remaining, how much? 8. Clear? Good.
2,500, this is for what?
Okay? So differential 128 minus 100, it is 28. Everybody got this point? Good. So excess value 20, it is given. Only one item, building and equipment. And now how much is the goodwill? 8,000. 28,000 is the total differential, minus 20 excess value, we get 8. So is that clear?
This one. 2,500, this is for what?
Okay, that's later. Later, that is goodwill remained after impairment. So now it is 8,500, right? The 2,500 is the ending value of that. So how much impaired? 5,500. Okay, you got the point? So that 2,500 given you to calculate impairment. Now you can calculate the impairment different, but now not now. At the beginning, let's calculate the how much is the goodwill. Okay, if this is clear, so what is the next step? We can do the, we can calculate the net income of the subsidiary, right? Because to equity method, how many equity method entry we have? 4. What are they? Acquisition, net income, dividend, and
Amortization.
adjustment. Amortization is the consolidation. Here, adjustment. So here, acquisition entry. How much is the acquisition price? 128. So debit investment, credit cash, 128,000. Second one, net income. Now here, how much is the net income? Look, net income is the difference between sales, 180, and all expenses, cost of goods sold, wage expense, okay, wage expense, depreciation expense, interest expense, other expenses. So these are all expenses, okay? So the difference between revenue and all other expenses, it is 24. What is this 24? Net income of subsidiary. Who is subsidiary? Saver company, okay? What is the net income of subsidiary? 24. So what else do we need? Dividend. How much is the dividend for Saver company? Dividend declared by Saver, 16. So we know the acquisition price, 128. We know the net income, 24. We know the dividend, 16. And for the fourth entry, what do we need? How much will be amortized? So Building has excess value of how much? 20,000, correct? How many years is the useful life for the building?
10.
10 years. It was saying somewhere here. Building and the equipment are depreciated on 10-year basis. So the excess value 20,000 is given here. 10 years, divide 20 to 10, every year 2,000. So first year, we will deduct 2,000. Okay? So far it's okay? Good. So also 5,500 for the impairment loss. So these two together will be expenses. 5,500 plus 2,000, 7,500, correct? Total amortization. How much was the income? 24. If you deduct 7,500, you will get this number, you see? This is the net income, or actually income from subsidiary, net amount recorded by the parent. They don't record here 24, you see? Previously, chapter 2, it was same as the net income, but now it is not because it's after adjustment. All right, let's see the entries. I said that there are 4 entries we have, right? Okay, let me do them for you somewhere here. Okay, here, let me open a new page and then do it there. Okay, so journal entries. Investment in saver company, okay, debit, credit, cash, right? This is the first entry. What is this for? This is for acquisition. Investment in saver company, debit, credit, income from saver company. Clear? And then the third one, debit, cash, credit, investment in saver company. And the last one will be debit, income from saver company, right? And credit, investment from saver company. Okay. All right, so far online, you don't contribute too much today. Nadia, Maryam, Sarah, Sheikha, Zainab, I don't hear your voice today. Why? Are you following? Okay, Maryam, thank you. You joined a few times, but the others, I'm not hearing too much. Are you there? Okay, Maryam is there. It is sure. But the others, I am not hearing anything from you. All right, please follow. So the acquisition information, 128,000 debit, 128,000 credit, correct? Okay. Then net income, how much we calculated? 24. Credit, 24,000. Dividend, how much was the dividend? Remember? 16. That will be 16. What about income from saver? Yeah, how do we get it? 5,500 plus 2,000, right? There are two amortization. One is for the building, the other is for what? The other is for impairment loss, for goodwill. Okay, goodwill impairment loss. So is this clear, all the entries?
How we calculate the last one?
Okay, the last one. The last one, how we calculated? We calculated last one like this. Okay, what do you see here? 28,000 is the total differential, correct? 20,000 is for building and equipment, 8,000 for goodwill, correct? You know how what's 20, what's 8. So for building and equipment, 10-year is the depreciation. So every year it is 2,000, correct? For impairment, it says that ending balance will be 2,500 because after impairment, the final balance is 2,500. It is given in the question, remember? Okay, let me show you. Saver shares had been impaired and correct carrying value is 2,500 at this date. You see, December 31st, it is 2,500. So if the ending balance is 2,500, but when you acquire it, it is 8,000, the difference will be 5,500. So 5,500 impairment, 2,000 is the depreciation. Together it makes 7,500. Clear? Any question? Now you get understand this, right? 7,500. What is 7,500 and where did we calculate it? Okay, and this table also used in the consolidation. Okay, there are two entries relating to this one. One is excess value reclassification entry. The other is amortization. Okay, that you said you are correct, but it is in the consolidation. Now in the this book value, I mean in this equity method entries, only we use the total amount as deduction from income and also deduction from investment. So based on this, okay, look, investment amount increased, decreased, so we can calculate the book value for this investment. So when we look at the book value of the investment, right? What is the book value of the investment? Beginning balance is 100 because 60 plus 40, right? And when we look at the net income, plus 24 minus 16, this is the ending balance for retained earnings. All right? So this book value 108, but this 108 is only for what? Book value. And the excess value calculation a few minutes ago I showed that 20,500. So these two tables we can prepare with that information. Now you know how to prepare book value calculation table. You know how to prepare excess value calculation table. So in class assignment, what you should know how to make equity method entries. That 4 entries. You should know how to do this book value calculation table. And based on this book value table, how can you prepare the basic consolidation entry? Basic consolidation entry is this one. Okay, now equity method entries, now I have prepared a few minutes ago. Book value calculation table is this. Okay, book value calculation table is this. Where is it? It is here. Look, book value calculation table. You know this one, right? So beginning balance plus net income minus dividend, you get ending balance. You should know this one. And also, after this, using this one, we prepare basic consolidation entry. So when you say basic consolidation entry, we eliminate common stock, retained earnings, we eliminate income, we eliminate dividend, and we eliminate investment. Okay? So all of them is from this table. Which table? This table. Okay? So let me show you it together. Oh, sorry. Okay, cannot do it. Just I want to show this entry and table together. Here it is. Okay, now look at here. You cannot look. Why? Because it's going. All right, now here you can look here. What do you have here? Book value calculation table is this. Okay. What is book value calculation table? This beginning book value plus net income minus dividend ending book value. So looking at this one, we prepare this basic consolidation entry. Be careful. Retained earnings is the beginning balance. Investment is the ending balance. Okay? So net income, dividend, common stock, and retained earnings. All of them are eliminated here. Clear? So what is this called? Basic consolidation entry. Actually, when we talk about consolidation, we have 4 entries, correct? First one is basic consolidation. Now this is the basic consolidation. The second one and third one is about this table. Which table? Excess value reclassification table. Now, a few minutes ago, I explained what is this excess value reclassification table. Is that clear? What is this excess value? How we get this 20? How we get this 8? How do we calculate this 5,500? How do we calculate this 2,000? For example, this 2,000. How did we calculate it? Dalal, how did we calculate this 2,000?
Every year.
Yes. How many years? 10 years. So if there is 10 years life, the building is 20,000. We divide 20 by 10, we get 2,000, correct? So the question is, why we didn't write below the building and equipment, but we open the accumulate depreciation column? Why? Because in accounting, we record any decrease in the building in accumulated depreciation. In the balance sheet also, we don't record depreciation. We don't deduct it from the accumulated building. We are opening another account, accumulated depreciation. So here the same, okay? So anything about depreciation, we are opening new column as the accumulated depreciation. Why is this 0? Fatma, why is this 0? Beginning balance. It should be because this is the first year. First year. So be careful. What is typical mistake you do here? The typical mistake is not write 20. Instead of that, someone is writing these numbers. Someone is writing what is building 150, you see? And they wrote 40. Someone writing this 150 and 40 here. Is it correct? No. Why? We don't make table for building. We are making table for excess value of building. This table is only for excess value. So at the date of acquisition, what is the excess? 20, not 150. Okay? But someone mistaken and accumulate depreciation. They don't want to keep it empty. Okay, what I should write? They go and find something there and write it. No. It should be 0 at the beginning. But later, remember the last class, we have third year, fourth year or something. We have already some balances because it is not the first year. But this is first year, so excess is 0. Okay, be careful. All right? This is a typical mistake we may make. Just be careful. So here, using this table, we have 2 entries, okay? What entry? Excess value amortization entry and excess value reclassification entry. One is for expense, the other is for asset, fair value of the asset, the excess value of the asset. So the first one, depreciation expense and impairment loss. Do you see them? Where did we get these numbers? Here. This 2,000, Dalal a few minutes ago explained that 20,000 divided to 10. So this 5,500, where did we get this number, 5,005? Anybody can say that? 8,000 minus 2,500, right? We know 8,000 at the beginning. When we calculate the goodwill, it was 8,000. 2,500, given in the question, it says that this value is impaired and the new balance is 2,500. So it was 8,000, now it is 2,500. So it decreased to this amount. So what is the difference? 5,500. So what do we call this 5,500? Impairment loss. Goodwill impairment loss. Okay. So these two are expenses. Okay. Actually, these two amounts already we adjusted at the beginning. So income, be careful. Typical mistake. Someone write investment here. It is not investment. It is income. Okay. So you should know this. For consolidation entry. Basic consolidation entry for this common stock, retained earnings and others. excess value reclassification entry, amortized excess value or amortization entry, and finally we have one more entry. What is that? Accumulate depreciation entry. Also, one thing else we learned in the previous one. Do you remember? There was fifth one, number 5. What was it? 4 is no, amortization is in the 4. These are consolidation entry. But we also have something else. In this chapter we learned that. What's that? Do you remember last question we did it? Do you remember last question? If
Investments.
no, it's about intercorporate transactions. Do you remember? If parent owes some amount to subsidiary, or subsidiary owes something, loans payable, accounts payable, between parents and subsidiary must be eliminated. Okay? Remember that? So intercorporate, and in the assignment also you should be aware about that. If there is any intercorporate transaction, you have to eliminate. How we were doing it? Just doing a reverse entry, right? Reverse entry. How reverse? If it is accounts payable, debit accounts payable, okay, and credit account receivable. So those accounts will decrease. All right. Now here, these amounts, look, excess value reclassification entry, we are now writing the excess value of the assets and liabilities, anything here, any amount here as minus balance as credit, okay, any amount plus balance will be debit, okay. So building and equipment, debit, accumulate depreciation, credit, goodwill, debit. But be careful, in the excess value reclassification entry, which balance I wrote, 8,000 or 2,500? 2,500. Why? Because I'm using the ending balance. At the end of that, after recording the expense relating to that, after amortizing the excess, then we are just writing the ending balance. So we are taking the ending balances. So this ending balance, 20,500, is credit to investment account. Okay? Is this clear, these two entries? And then we have one more entry here about accumulated depreciation. Remember, accumulated depreciation here, okay, here it is. Saver companies accumulate depreciation. Do we write 40 there? No. Why? Because end of the year. So you should go to beginning of the year, right? So what we were doing, do you remember? Lima, do you remember what we did? In the assignment submission, you did it very well. You got hundreds. Now you forgot it, did you? Well, how we are calculating this accumulated depreciation at the date of acquisition? We deduct. Remember? So this 40 minus 10. 40 minus 10. Okay? So the entry here for the accumulated depreciation will be 30. Okay, Shekhar, did you get it? The accumulated depreciation, that 40 is at the end of the year. So we need beginning balance, I mean at the date of acquisition. So date of acquisition is after recording this 10,000, it make 40. Before writing this 10,000, it was 30. 30 at the beginning, we add 10, so it makes 30, 40. So we don't need this 10, so we deduct it. So beginning of the year, it was 30. So 40,000 minus 10,000, we get this 30,000. Okay, any question? Clear? Good. So this is the about consolidation. Actually, in the tomorrow, not Sunday's in-class assignment, I will not ask this one because it takes too much time in one class. You cannot finish it. Maybe I can ask somehow some part in the final assessment. We have longer time. But now for tomorrow, not tomorrow, next class. I'm always tomorrow. The next working day.
This Sunday or?
This Sunday. 3 days later. 28 of.
It would be similar to the situations or
It is not similar to anything. It is different. Solution is similar. Every solution is similar.
Yeah, so.
But the question is
Ask
different.
about, like,
You know,
cost.
for example, here I can ask from trial balance or I can ask from the balance sheet. Now in class I'm planning to ask to balance sheet, not the trial balance. Okay? So you can take the information from the balance sheet. But if I ask you a trial balance, you can also do it. You know, there are a few ways asking it, but the solution is same. Solution is always this. Okay, this one shows 90% of the solution, right? Only elimination of intercorporate account is not here, except that everything is full picture is here. So if you know the equity method entries, if you know the book value calculation table, if you know basic consolidation entry, if you know how to prepare this excess value, how to calculate this excess value, and if you know how to amortize excess value and record excess value recalculation entry, and accumulate depreciation, that will be okay. That will be done. All right? So that's great. So any question? What about the project? How is it going? Have you started? If you didn't, just wait. You know, just 1, 2 weeks more wait. Just 3 days, you can finish it. Can you?
No.
No, of course not. It's a big project. This is comprehensive project, and it is very useful and very beneficial for you. If you study that, you will understand really some good information you can get from these real examples. So you are asking and getting answers. Understand that? You understand what second part? Okay. Now I did second first, but the thing is this actually, you know, mainly these use a case. You will present a case from beginning to the end. How it has happened, why it has happened, what is the result. I mean everything about the case. But beside that, in the beginning of that, actually I asked some general information. Why? What is consolidation? But I put it 500 there because someone writing 90% about the explanation, the details, case is just very small. I don't want it. Case should be the majority of the work. Okay, the first part, actually, even you can ignore the first part, but the thing is this, the case is very important. So looking at the case, you can explain the first part as well. Okay, just what I try to write to you in the mail. So the thing is here, you explain what is consolidation, what is merger, what is acquisition, how it is done in general. In theoretically, give some introduction. That is introduction, just 500 words or something. The other part, case, is important with numbers, with real figures, facts. Okay, so you should give some, you know, really impressive. Okay, oh, when someone listens, oh, what an interesting thing in this acquisition, this happened, that happened. This is not happened because of this. I mean, some, you know, good presentation I expect in you. I think you can do it. You will. Don't you know that? Is that a surprise for you? No, you will. You will have a presentation. You will have presentation in the class here.
Presentation is after the break, right?
Normally, I planned starting from before break, but since our class size is not too big, so three session will be enough, inshallah. But anybody wants to do it before break, maybe we can arrange one presentation. Anybody wants to do before break? No? So we have enough time after the break. Three sessions we have. So I think we have 9 groups. So each day 3 groups. But I am not sure how we arrange this odd and even issue. Maybe we try to finish first week, then anything remains the second week. So when you come immediately from holiday in the morning, 8 o'clock, you want to do presentation?
No.
Are you sure about that? Just after the break, after long 2 weeks break, you will come here 8:30. You will have a presentation. Who wants it? Maybe it's better to start the 1 week before. What do you think? It's up to you. If you want it, I will make it. If you don't want before break, then I have to start immediately just after that. But someone can say that, okay, that adrenaline I want in my holiday, I want to keep in mind these courses. I want to connect with the class. So you can. Just your choice. Or someone is tired of traveling, but this holiday I will stay here. That's your choice. You can tell me you want to before or after. Because I think I normally in syllabus I put 4 hours for 4 sessions, but now 3 is enough for me. So which one you want, I can arrange it. The other part I can continue the chapter. For example, when I come to from the holiday, maybe first class I can do class instead of presentation. But if we do the one session before the holiday, Thursday, a presentation. Let's talk it about later, okay? When you come next time, I think you will be here on week 11, but in class. No, there is no in class that time. Yeah, project deliverable week. So that week, okay? When you submit your project, that time we can talk about that. So I can make a tentative plan. So maybe anybody doesn't want to present after holiday, they can present before holiday. But and again, you know, the odd even issue. There are some mixed group as well, right? Not too much, but right? Okay. So all mixed group either will be before or after, they will decide. Either only odd, only even, they are okay. The last 2 class, one class for odd, one class for even, I can arrange. But the mixed group should decide either before or after, because the first time they will, let's do the mixed groups. Clear?
Professor, the
Yes.
break is on week 12,
Which one?
the break.
The break week 13. 13 and 14, 2 weeks. Week 12, we have presentation actually, one class we are planning, but as I said you, that is not necessary, but let's talk about that later. Right? Week 11, when you come here, we can talk about that. Right, anything you want to say? Thank you very much. Waking up too early, coming here, spending time here, and listening very carefully, contributing really significantly. I really thank you. I appreciate your efforts for this course. Next week, I wish you to continue your efforts in the in-class assignment as well by giving good answers. So far, the performance is very good, outstanding, except some person should be more careful about following assessment. A few grades are low, but